Well, good morning, everyone. Welcome to our Thursday morning trading room. Hang on here 1 second. We'll get the screen share going. Okay, so we're off to a quiet start here this morning. Let me, just for reference sake, just take a look at a daily chart here for the NASDAQ. I like to do this. I like to have a kind of a longer term chart handy, just so I can see where the market is relative to the big trend. Okay, so it looks like, at least for the last couple of weeks or so, the market's been in a little bit of an uptrend. And I don't know, we're running into some serious resistance here. It looks like at around 6,900. So we'll see whether or not that puts some strain on the buyers here this morning. Hi, David. David's asking, how are the dogs doing? Much better, actually. My wife is like a dog whisperer, and she's slowly bringing them around. I have a feeling the dogs were running the household here, but they're doing very well. Except it's a rainy day here today in the Pacific Northwest, and Chihuahuas apparently don't like the rain very much. So there won't be any walks today, I don't think. All right, we're getting a few mixed signals here. Let's take a look here. We'll start with the Eagle. And with the Eagle, you can see we're currently in scalp mode, which, yeah, it kind of looks like the market's just been drifting sideways for a little while. Trend mode, hopefully, coming on the heels of that. You can see the overnight was relatively quiet. The Hawk bouncing back and forth, the Falcon also waffling quite a bit here. Our trend line keeps changing color. All right, well, we'll wait them out here, see if they settle in on a direction. And we're still here for another week, so you're gonna have to put up with me with the laptop trying to run 3 screens on one. So to that end, I'll end up focusing just on one of the charts again. And I'm defaulting to the Raptor just because I know there's quite a few Raptor owners in the room. I had a question the other day. One of the owners was confused about what constitutes a hard edge and a soft edge on the Raptor clouds. The Raptor clouds, one is stacked over the other, and we refer to this edge here as the soft edge. And then the darker line, or the brighter line, as the hard edge. Yeah, Scott says the laptop looks very Miami Vice. Yes, yes, it does. It's kind of Windows 90, 95, isn't it? All right, a little bit of a run up there, a little bit of a retest of the overnight high. Yeah, David's asking here, I've been watching some Raptor videos, looks a bit older. Are you no longer using equivolume indicator or am I not seeing it? I am still using it. In case you guys missed my comments from a few days ago, we're doing friends a favor while they're out of town. We're house sitting for them and watching their dogs. But I don't use my laptop for trading. And so I hadn't actually done anything chart-wise on this computer for over a year. I didn't realize until after I booted it that I still had the old Raptor and of course the old Trade Manager that you see on here. So I don't have the equivolume bars on here. I don't have the logic counter on here. I don't have the Geiger counter on here. So next week, the middle of next week, things will be back to normal. I'll be back in my office and I will have my rig. All right, this is actually a hard edge bounce signal and it's still early, but that's probably one that might be worth trying. I'm not going to hop on board just yet, but anytime you see a market retrace back to what looks like a resistance zone, that very often offers a half decent buying opportunity. All right, and now we're coming back with a number two signal. So we really have a market that's quite conflicted here. It's very early. It's coming up on quarter to the hour, my least favorite time of the day to trade. However, if you were inclined to bracket this range, you could do an OCO order and maybe try to capture some early market momentum on a breakout because the market is struggling for direction here. Now, remember, when you use your OCO orders, these orders are live the moment you put them on your chart. So I tend to place them a little bit further and then drag them to where I want them to be. Although I guess those are pretty good where they are. So I'm defining this as my little sideways trading range because the market has come down. It should have rallied from here, but it didn't. Came down, should have failed and headed lower, but it didn't. So I've got a little bit of the market's in a little bit of a twist here. So just trying to plot my my stop. Okay, here we go with another breakout attempt. We'll see whether or not this one sticks. All right, so they filled me on this order, and we're moving into trend mode, so I may delete my break even. I'm going to hold my stops here for a little bit. There we go. And try to give this trade a little bit of chance. If we start to get some traction on the trade, I will bring my stop strategy online. So whenever you break out of what you believe to be a sideways trading range or a significant resistance zone, you always need to anticipate a retest. And this is why I deleted my break even, because somewhere through here the market is going to try to retest this breakout, and I did not want to get tagged at a break even level. Now, unfortunately for me, that also means that if the retest fails and goes deeper back inside this trading range, then it's going to threaten my exit stop. But we had a couple hard edge bounces here. The trading band is bullish. Okay, here we go now with that quick little retest. If the buyers can recover it, yeah, Scott says that's when it comes back down, hits my break even +2. And you can see here I would have been tagged at break even as well. Now, it's not always a bad thing to get out at break even. You know, it's always preferable to a loss. And when the market is struggling for direction, you know, it's always a good idea to consider taking profit on target and maybe even being a little bit more aggressive with your break-even stop. However, if you can stand it and you can allow the market to make a swing, then you'll get a better idea which way it may want to go. Okay, the buyer's got to pick it up here though. See this bar right here with the one with the tail on it? That was the retest of the breakout. So this is where the buyers bought in before. The market's come back down. The buyers are now trying to support their buying. More buyers are hopping on board. They're looking at this and saying, hey, the market's retesting. The breakout's going to hold. Let's buy in. Okay, here come the sellers. And it's decision time now for the market. This next bar or two is pretty much going to set the tone. Well, that's not quite the tone I was looking for. This is technically a number 2 signal. And you've got a second push opportunity on it as well. Okay, I'm going to roll my stops in below here a little bit. Oh, come on, giddy up. Don't make me roll my stops back. All right, have it your way. I'll give them to the hard edge. There should be one more retest of this 69.31 area. We're around that quarter to the hour time of the day, the first 15 minutes into the session. I find that the market very often will give you a signal that's not very reliable. I usually tend to avoid this time of the day. And I think you're going to see why here in a second. Wow. Okay. Well, they're obviously not interested in heading higher. So that does open up the possibility to sell this market. You know what? I'm still not convinced that I was necessarily on the wrong side of that move. This is really kind of shaping up to be a rather large bull flag. So we're back into the hard edge. So the signal that's going to produce here, if we get a buy signal, is going to be a number one signal. Because what's happening is your clouds are out of sync, they're coming back into sync. But you could also treat it as an early, so there's your number one signal to buy. You can also treat this as an possible early number one signal to sell if the market turns around and heads lower from here. Yeah, look at that. Scoundrels. They're giving me that retest there that I was expecting, but without they just drifted low enough to hit my stops. All right, we're kind of backing into a corner again. All right, we could see a move back here to the hard edge or close to the hard edge. That would come out with another buy signal. However, you may also interpret this big retest as a possible counter trend, a possible number two signal. Now, it will never print as a number two signal because it's too drawn out. However, what you're seeing is a market possibly retesting the highs of the morning. If it fails at this point and heads lower and produces a sell signal, if you were inclined, that would be what I would refer to as an early number two signal. Now, my buying attempts did not work, so I may be a little bit more inclined maybe to the short side. We'll see. We'll see how this plays out here over the next few minutes. We still have the possibility of a sell here, even though technically we have made a new high relative to this one. It's not quite your textbook test of the extreme, but look at what happened when it got up there. We got the big reverse bar. Hey, way to go, Dan. Dan says, I bagged 20 ticks on the red bar buy signal on the Eagle. Good job. Opening range almost expired. So if we get a sell signal here, I'm going to just hop in with a market order. And that's partly because, well, like I said, my buying attempt earlier did not work out. It didn't work, not so much that I wasn't right about the direction, but rather that my stops were too tight. However, the market is failing yet again around the 69, 30, 32 area. Not quite close enough to the hard edge for me to consider this a hard edge bounce. Market kind of trading mid-range in the first raptor cloud. All right, a little bit of a bounce now. Whenever the market encounters the hard edge of the trading band, we anticipate a reaction. There's my sell signal, and I will give that a whirl. And maybe I'll delete my break even. Like I say, for the sake of the trading room this week, because I'm kind of restricted with the laptop, I'm just going to try to run out my trades versus taking profit on target. However, I always recommend that you consider taking at least partial profit on target. It's one of those do as I say, not as I do situations. Okay, getting a little bit of buying support here. I bet if I just shot a trend line across there, it would be fairly close to trend line support. And this may actually develop into a broader trading range as well. It's kind of important that we see the market try to get below this 69.17 zone. Come on, let's get a little traction. There we go. All right, at this point, I will go to break even, and as Scott said, I can double my profit by going to break even plus 2. Don't swing too hard here. Oh, come on. Wow, they're just not cooperating today. Not getting any follow through. By the way, the better stop is still up here. Nope. Nope. Well, we're looking decidedly sideways here. You can see the eagle really showing you a broad sideways range. The falcon, it's got that whole roller coaster effect going on. All right, well, we'll just have to wait and see. We're producing an early cloud crossover now, an early number 1 signal to the short side. I may give that a whirl if we get a signal developing. Sellers can't afford to let the market drift too far, though, because it's going to change the trading band over again. The trading band gives us our directional bias. Now this a very drawn out cloud crossover. You know, it's kind of open to interpretation, this type of trade. Oh, buyers coming back with a buy signal. I would like to see the market reverse and head lower around here. This would make for a fairly reliable sell signal, even though technically it's not going to fall into the Raptor programming. the Raptor 2.0 programming, you're not going to get a signal prompt. However, what we're witnessing is a market trying to regain the bullish trend, but it might be coming up short here. Or if it does come up short, then that offers a selling opportunity for us. So it's going to be a discretionary number 2 signal. So these other signals that pop up from time to time. You wonder, why are those on my Raptor chart? Well, that's why they're there. They're what we refer to as the discretionary signals. Man, what a sideways kind of day today. All right, there's red bars. Come on, give me the signal now. I'm not going to move away from this chart. However, I have a feeling there may be a signal, perhaps a 4-arrow consolidation brewing on the hawk, which might be worth trying to short. No, my chandelier stops are on the wrong side as well, so I may end up having to go back to the swing stop when and if I get a sell signal here. By the way, this is another situation. You could use an OCO order if you prefer. You could look to buy. Sorry about that. I had to mute the mic here. There's a fair amount of new construction going on here in the neighborhood. Okay, so there's the sell signal. It's very close to my OCO order. David's asking, are the 2 magenta lines there a suggested entry area? I'm not quite sure which magenta lines you're referring to. If you're referring to the ones here in the filter kind of tries to give you the market momentum. Right now you can see the market momentum's a little bit more bullish. Right above the @ symbol. Well, that's actually my OCO order. And it looks like I just got filled on the long side. And I better get a stop in play here. And what I'm going to do is I'm going to hold my stop a couple of swings back. Just going to put it back down here where I got tagged out before. We really have a stagnant market here this morning. The best thing to do when the market is sideways like this is really just to wait it out. See, every time it tries to break higher, so it tries to break higher here, it reverses. It tries to break lower, it reverses. Tries to break higher, it reverses. The only good thing is that right now we have a higher low relative to the last one. So that does suggest that maybe the buyers are ever so slightly stronger. But now we're potentially making a lower pivot high. So okay, let's see here. Oh, I see. All right. Yes. Okay. So David's referring to these hash marks here. Excuse me. 1 second. Okay. With the Raptor, as with the other programming, you're going to notice that all the signals present the same way. First, when the signal parameters are beginning to be met, you're going to produce a warning dot along with an audio alert if you have your audio alerts turned on. When the signal is complete, you are going to get a triangle and a hash mark. And that's true for whatever tool you are using, whether you're using here the Hawk or the Falcon or the Eagle or the Raptor. So the hash mark, the triangle on the hash mark tells you that the signal is complete. The hash mark is a suggested entry area. Now, when I say suggested, you have to imagine air quotes around suggestion. Because computers are very black and white, we had to specify precisely what the suggested area would be. And in the case of the programming, it is 1 tick above or below the signal bar. So in this case, the bar with the triangle is the signal bar. And so the hash mark will print 1 tick below there. Vice versa, here is a buy signal. The triangle confirms that the signal is complete. The hash mark prints 1 tick above. Now, the reason I say it's suggested is that it's okay to use some degree of discretion. So, for instance, this morning's market, it's very sideways, right? I think we can all agree on that. Therefore, just because the market prints a signal with a hash mark, even if it's one of our higher probability signals, this one may have printed as a number 1 or even a number 3 signal. That doesn't mean that you can't do something like maybe a second push entry where we allow the signal to engage, and then we see where it flinches, in which case we could place our entry above these highs, vice versa here to the short side. This is not one of our high probability signals, mind you, but if you were, for whatever reason, inclined to trade this one, you could say, well, look, we had a reaction down here. I'm going to wait and see what kind of reaction we get before I choose to enter. Right here, again, we're producing a buy signal, and you may choose to take it on the hash mark if it's one of the high probability signals, or you may choose to temper your entry relative to what's going on the left side of your chart. All your trades should be done in context of what's going on the rest of the chart. But the short answer, yes, that is a suggested entry point. The long answer is you're going to want to temper that with, like I say, with what's going on the chart. Like for instance, this entry here, it may be printing as a number one signal. But given that the market is sideways, it might be better to wait for this second push opportunity, which you have right here. You have the market flinching after it produced the signals. You can see where you should enter or where you could enter above there. As I mentioned yesterday too, it's to your advantage to have a very selective mindset when it comes to choosing your trades. And what I mean by that is I was talking about a trading quota where you should really only trade 2 or 3 times a day. And what that does is it allows you to be very picky. If you're looking, I know I'm showing you a couple of trades here this morning, and it's partially out of boredom. It's partially out of the feeling that I need to show you something. And if you feel like you have to put on a trade in the sideways market, go into sim mode and go ahead, knock yourself out, amuse yourself. But if you're trading for real, it's to your advantage to, have that mindset where, okay, I'm only going to trade 2 or 3 times today. Is this one of the best opportunities I'm going to see today? Probably not. In fact, the way it's wedging up here, you may be better off bracketing the high of the day and the low of opening range and just leave it at that. If it breaks out, great. If it doesn't, okay. All right, David, the other David's asking, how do I get buy and sell buttons to enter 2 contracts rather than 1? I have the manual set to 2, but it still only enters 1. All right, you are in manual mode, not in risk percent mode. If you are in manual mode, whatever quantity you set up here is the quantity you will get. So, you are in manual mode. All right, I'll suggest one other thing before I get you to contact Ben, and that's if you, assuming you're not in a position, right-click on your chart and reload your Ninja script. Or you can just hit F5. What that does is it's going to reboot your trade manager. And if that still doesn't solve the problem, I would suggest doing a screenshot and emailing it to Ben. And his email, of course, is support@indicatorwarehouse.com. If he sees that you are in manual mode, that you have 2 contracts selected for your quantity, and show the screenshot where, after you hit your buy or sell button, that you only got the 1 contract, that will help him a lot. All right, well, the waffling continues. You can see we got the trading band kind of twisting up like a rope. Very, very stagnant market. Flip a coin, heads we buy, tails we sell. Now, they're going to try to come down here, test the bottom end of this trading range now. And the way this is going, it's probably going to drift low enough. See, the danger is that the market will break the low by a tick. To avoid that, you want to usually give it 4 or 5 ticks below that last swing low. I know it's no fun to do that, but what is less fun is to have the market come down, take you out by a tick, and then reverse and go the other way. Yeah, the other David is suggesting to the other David that maybe you need to go into the trade manager settings and click target 1 and target 2. That shouldn't matter so much though in manual mode. I can see that being an issue, like you're suggesting, if there's something wrong with the targets, but in manual mode, like I said, if I set 10 contracts, well, here, we got nothing going on. So we'll go here to the Falcon, and I will set manual, and I will dial this up to 7 contracts. If I buy market, you see I've got 7 contracts. It should default to that value right there. Okay, David says in manual mode I have that. Also, the bottom of the trade manager screen, target 1, target 2 has to match inside. Okay, well, I will leave that to Ben to solve. And here I'm going to close this position out. But you can certainly look into that, the other David. Check your trade manager settings to make sure that they match the other parameters. All right, we're getting a little bit of traction on the trade now. and I think I will take this to break even and keep my fingers crossed that the market doesn't pull back too far on me, and maybe this time the breakout will actually hold. Yes, I will. I'll refer to you as David N and David G. There was a while I had like 3 Anthonys in the room, 2 Stevens, and a couple of Davids. So, oh, doggone it. Can't catch a break here today. Well, at least my OCO trade recovered enough that I did get out at break even. Oh, looks like we got 2 Toms in the room this morning. Only 1 Scott, thank goodness. Oh, we got 3 Davids here this morning. Yeah. Yeah, Tom says just try to keep you on your toes. Yeah, thanks. That's what I need. All right, a little bit of a bullish break. Here's that retest now. Oh, come on now. Just get down here a little bit more and then you can come back and give me that number 1 signal. Oh. Well, David N., you could be right. You're just a year younger than my dad. David says, I'm the oldest. I bet I'm the oldest trader you've had in the room. I'm 82. Wow. Good for you. I would hope that if I live to be 82, I still have all my marbles about me. All right, we're getting a little bit of an early cloud crossover signal going on here. So the clouds, and again, I'm not entirely sure if the Raptor is going to print it this way because the clouds were a little bit of a jumbled mess here. They're now in sync. We've got this little bit of a pullback going on. The next signal that prints should be the number 1 signal. All right, here's a little bit of a pullback. Come on. Come on down, give me that bounce, and then I will look to buy ya. David, your posting your age reminds me of that great line Burgess Meredith said in Grumpy Old Men, the movie, where Jack Nicholas and Walter Matthau are fighting about something or another, and he makes the comment, he says, yeah, what, you know, tells him to behave or something or the other, but he says, yeah, one day you wake up and you realize you're not 81 anymore. He was quite a character in that movie. All right, so here we're back now to the breakout zone where the market breached the resistance, and we'll see now whether we get a little bounce up and we get that buy signal. Come on. And this could be worth a buying attempt, because we've seen the breakout, we've got the retest, and now we'll see whether or not the buyers can actually pull it together. And once again, just for convenience sake, I'll use my buy and sell market buttons. Speaking of discretionary signals, or in relation to where the hash mark was, this is actually the type of trade, if we were anticipating a signal to print and it was going to print around here for a couple extra ticks, I would look to enter above the current high rather than enter right on the hash mark. And are they not going to give it to me? Scoundrels. I've got one here in the Falcon. I've got a nice little trend line touch. That may even be a late filter signal. No. But a nice trend line touch all the same. A nice macro pullback here in the hawk. But as far as the Raptor programming goes, oh, there we go. Now I have the signal. So they're actually giving me a chance here to do a second push entry. Oops, wrong button. This was one of the reasons we gave the trade manager a bit of a facelift. And those of you who remember this trade manager know how often I would complain that the accept button and the submit button are the same color. Of all the colors the programmers have to choose from, they got to make the two most important buttons on your trade manager the same color. Go figure. All right, no follow through just yet. Looks like it's going to be, I was going to say, it looks like it's going to be that kind of day, folks, where we just get the constant back and forth. I'm going to let the trade manager handle my stops here for the moment. Take him down there. Terrific. Okay. David N has figured out his problem with the buy and sell market buttons. That's great. And we have a market maybe trying to trade higher. Yeah, we're trading in slow motion here. Yeah, you know, David makes a comment, I see the market down at this point, and it's entirely possible because we've got this sideways trading range going on, right? So here, I'll show you on the Eagle, it'll make a little bit more sense. So we have oops, wrong button, let's try this again. Okay, well, you're gonna have to bear with me here. So we have a sideways trading range that did extend from here. Stop that. To down here. And what tends to happen is when the market is in these sideways ranges, it will occasionally make a little break, but the vast majority of the selling is at the top end of the range. The vast majority of the buying is at the bottom end of the range. And what happens is you get these traders, these breakout traders. This is why my trading friend always said, never trust a breakout. Okay, so you get these breakout traders, and they buy here. They buy on this little breakout. And what happens, of course, is the market starts reversing and heading lower, and they're begging and pleading with the market to head higher. And it finally does, and what do? Is they panic and they get out of their position at break even or at a small loss, right? They say, okay, I've had enough of this, let me out. What happens to the downside? Well, we get the same thing. We get the breakout traders and they're selling down here. The market starts to move against them and they're begging and pleading with the market, please, please, please let me out at break even. Well, it tried, it's not there yet, but it breaches the highs here. There's a chance it's going to try to come down here and do the whole pattern over again. This is how trading ranges develop. It's not just the sellers selling at the top, buyers buying at the bottom. You can refer to them as the smart money, if you will, because they're the ones making money on the trade. But it's also fueled by the breakout trader. I'm not going to call them the novice trader because sometimes, you know, if you wait for the retest, the breakout can actually work for you. Yeah, I suppose that is a problem that plagues a novice trader. We'll call them the novice traders, the newbies. they trade the breakout, the market reverses, and then they get out at break even if they can. And what ends up happening is they, little do they know, all they do is perpetuate the whole sideways trading range thing. All right, got a little bit of giddy up on the market now, not a whole lot, but enough that maybe I'll change stop strategies. Oh, brother, here they go again. Get going. Well, it's been a fairly quiet morning here overall. I'm going to hold my stops here just for the moment. In fact, I can't really see that there's been one real quality trade here this morning. I know I've tried a couple, but there hasn't really been much to do. Scott says we're in a resistance level at 69.39. He's looking for the market to turn at that point. Yeah, we'll see. So what you're saying, Scott, is I should have, oh yes, my resistance level. So what you're saying, Scott, is I should have taken my 2-tick profit. Scott says that's how I do it. Well, we'll see here in a minute whether the buyers are truly serious or not. You can see we got a little trend line support going on here. Well, thanks, David. David says, I found your support and resistance levels are fairly accurate, at least for the short term. I'm very proud of those. They took a long time to develop, but yes, they do seem to find some pretty significant support and resistance zones. And then, of course, if the market happens to breach those zones, then you can always look to the next zone as a possible profit objective. All right, well, we haven't moved all that far off the whole 69.39, 69.40 zone. Scott's asking, how do they find the levels? The data actually goes back about 10 days, and it looks at, it analyzes where the market spent a lot of time, actually, where prices were turning, a lot of price levels that had a lot of hits to them, if you will, where the market spent a lot of time. And it also analyzes the ranges that the market's been making over that period, over the last 2 weeks. And from there, it runs some algorithms and figures out where the market may experience some sensitivity when prices trade higher or lower. Yeah, like Scott says, so like how many times a price hits something in a 30-minute window. Yes, except it does it on a broader view. But yeah. It also takes ranges into account. I think that's something that a lot of traders overlook, is that, markets don't always make the same ranges. Everybody comes into trading, or I shouldn't say everybody, but a lot of people come into trading with the almost with like a work mindset. If you're working at your cubicle day in and day out, your workload probably doesn't, or your work itself probably doesn't change that much. Sorry, had another dump truck rolling by here. Your work probably does not, on the whole, change all that much. Yeah, some days are busier, some days are quieter, but for the most part, your work is the same day in and day out. Well, the markets aren't like that, right? The markets are very dynamic. Some days the markets make huge ranges, huge volatility, huge swings. And other days we have this, where I'm going to take my 2-tick profit. Oh, okay. Scott says it only looks back 10 days and it wants 20 days to run. No, sorry, Scott, my mistake. It looks back 20 days. Yeah, David says it sounds sort of like an order flow indicator. Yes and no. Like it's really more sensitive to price. It does very little in the way of volume. I always approach the markets with the mindset that really the price is the bottom line, right? This is real people putting real money on the line. And, well, we kind of went from there. So, yeah, here we are now. We're kind of hanging around the 69.40 area. I got my 2-tick profit, so I can get my wife a Starbucks gift card for Mother's Day. Maybe a ring from the bubblegum machine if I'm lucky. The lack of follow through here this morning is amazing. Just very, very quiet. David's asking if the market is above or below prices during the past 20 days, how does it figure the lines? Well, it doesn't. Okay, here's the Reader's Digest version. All right, hold on a second. I got to make some room here. Oops. Okay. So I have a pretty good idea that over the next couple of days, assuming this is going to stay the high of the day, okay, so here's just a couple of levels. Okay, so there's no denying that there's some price sensitivity around 69.42. There's some price sensitivity around 69.28.5. Again, that's 69.21 and looks like around 69.17. All right, so these numbers are going to be fairly influential in determining the future support and resistance levels. Okay, that's just one day. So when you go back for the last 20 days and you analyze, okay, well, how many times has the market traded 69.28.5? How many times has the market traded 69.42? How many times has the market traded 69.21? How many times has it hit that price zone? Then you can, it's almost a situation where might makes right. So if you have, say, 30 occurrences at 69.21 and only 10 occurrences at 69.23, well then 69.21 is going to be the stronger price level. And that will factor into the calculations more than 69.23. But that's only one component. Then you also have to figure on the ranges. What kind of range does the market make through the day? Is the market expanding? Is the market contracting? Oh, neighbor's going to work. And you need to balance that into the equation as well. So there's actually quite a bit going on with the support and resistance suite. It does take price frequency into consideration. It takes market range into consideration. There's a lot of stuff that it takes into consideration in its calculations. Yeah, isn't corn silk a pretty color? Scott says that's a beautiful shade of corn silk. But that's the Reader's Digest version of the support and resistance suite. Like I said, it took me a long time to develop. There's a fair amount of math behind it. They are not floor pivots, obviously, although occasionally they may coincide with floor pivots. They are not Fibonacci levels, although occasionally they may coincide with a Fibonacci level. I think it's important that you treat them as a tool. You need to remember that, okay, if I have a line printing 69.39 or just wherever it is, 69.40, okay, there we go, 69.39, that line does not really exist, right? Just like these clouds don't really exist and this filter doesn't really exist. The only thing that truly exists is the price. These are all tools that we use to help us make trading decisions. So if the price happens to trade a tick or two above the resistance, that does not necessarily invalidate the resistance zone. So if prices now happen to turn and head lower, that would tend to confirm the resistance zone, in which case you could probably expect price to retreat to the next resistance zone. And so far, they're not doing that. But we're kind of getting close into the lunch hour break. I think we're going to wrap up things here for this morning. Well, thanks for the endorsement there, Scott. Scott says if anyone in the room doesn't have the support and resistance tool or DTS, they really should take a look at them. Thanks, Scott. Your check's in the mail. All right. We're going to button things up here for a moment for today, and I will see you again tomorrow. Hopefully the market will be a little bit more responsive. If you are going to trade this afternoon, I don't know, it just looks like you're going to see more of the same, more of the back and forth, slow sideways grind. I will talk to you Friday. See you then. Bye for now.